Greetings everyone. Welcome to my channel XII Accountancy by Ch-1, Accounting Made Easy. Thank you to all my lovely subscribers for showing your love and support in all my videos, and to all those who've come here for the first time. Hi. So moving on. Today we'll be talking about Accounting for Share Capital, Chapter 1, Volume 2, T.S. Grewal. In this video, we'll be talking about forfeiture of shares which are originally issued at premium and their reissue. With the help of certain examples, we'll understand these topics. So forfeiture and reissue of shares. I have already explained both these topics in the previous video in detail. You can click on the I button for more details. Just to brush up, forfeiture means the cancellation of the shares, because if on a certain share, certain amount has not been received on allotment or calls, then the company may forfeit or cancel those shares. And these cancelled shares may be reissued to certain other people, maybe at par, at premium, or at discount. Now, forfeiture of shares originally issued at premium. This is the topic that we'll be talking about in this video. At par, I have already discussed in the previous videos. Again, you can click on the I button for more details. Okay, so when the shares are, they were originally issued at premium, then two cases might arise. Either the premium is paid or it will be unpaid. In case the premium is paid, that is, the defaulter, the shareholder who has not paid, who has made default on the payment of any of the stage, right, if he has paid the amount of premium, let's say, for example, we have, let's say, three stages: application, allotment, and call, and the premium was on allotment. So there is a shareholder who has paid application and allotment and has not paid call. That means the premium is paid. So whenever the premium is paid, we are only going to ignore it. Okay, we are going to ignore whether we are going to treat the question as if premium was not given in the question. So same entry will be passed as we used to do in case of forfeiture of shares originally issued at par, right? So if the premium is paid, we simply ignore it and we do the question normally, if the premium, as if the premium was not given. Okay, but if in the other case, let's say that's the first case. Okay, so if in the second case the person has paid application but has not paid allotment and the call, or maybe just not paid the allotment. Now premium was on allotment and allotment has not been paid. That means the premium is unpaid. Now in this situation, when the premium is unpaid, this amount of premium must be debited at the time of forfeiture. So the entry for forfeiture will change when the premium is unpaid. So I'm going to repeat that again. When the premium is paid, we are simply going to ignore it, and when the premium is unpaid, then we are going to debit it in the forfeiture entry. Let's look at the accounting treatment at the time of forfeiture of the shares. So as I told you, there are two instances. First is when calls in errors account is not made. When it is not made, that means you are not going to credit calls in errors account. Rather, you will credit the respective stage which the person has not paid, right? Now, in case premium is unpaid, because obviously the entry, if the premium is paid, the premium will be ignored, right? So the entry will be same as in case of par. The forfeiture in case of par, the entry will be same. So these entries which I'm going to talk about right now is when the premium is unpaid. So whenever the premium is unpaid, it is always debited. It is always debited in the entry for forfeiture. So share capital, as you all know, is debited with the amount of called up value. Then premium will be debited with the amount of unpaid premium. Okay, so let's say if a share is of 10 rupees and 2 rupees is the premium, and a person has not paid 2 rupees, then premium will be credited at the rate of 2. But in another instance, let's say the share is of 10 and premium is 2, but the person has paid 1 rupee and has not paid 1. Okay, 1 rupee is paid and 1 rupee is not paid. Then it will be debited with 1 rupee, right? So it is always debited with the amount of premium that is unpaid. Share forfeited, it is credited with the amount that has already been received on those shares. Allotment and calls will be credited with the amount that has not been received on each one of them. Similarly, forfeiture entry when calls in errors account is made is absolutely same. Share capital is debited with the called up value, security premium with the unpaid amount of premium, share forfeited with the amount that has been received so far, and calls in errors with the total amount that has not been received. So it might include the amount not paid on allotment and the amount not paid on any of the call. Right, moving on, the reissue entries also I have already discussed. The reissue may be at par, where bank is debited with the amount that you are receiving on reissue. Two, since the shares are being reissued, capital is being generated, so to share capital with the amount credited as paid up. Reissue may also be at premium. In case it is at premium, then share capital and bank, you already know. In addition to that, security premium reserve will be credited with the excess amount that you have received over and above the paid up value. Reissue may also be at discount, and in that case, share forfeited account is debited. It is debited with the amount of discount that you are allowing to on the at the time of reissue. Right, all these entries I have discussed in detail in the previous video, so that's why I'm not wasting much time on the explanation in this one. Okay, moving on. Reissue entry also includes the entry for transfer of the balance of the share forfeited account to the capital reserve. The entry is the share forfeited account is always debited and capital reserve account is credited because the reserve is created and the amount of forfeiture is share forfeited is transferred to the reserve. Now, capital reserve can be calculated as you can see here. In case all the shares that have been forfeited are reissued. Okay, suppose 100 shares are forfeited and 100 shares are reissued, then capital reserve will be equal to share forfeited DR balance minus share forfeited CR balance. Right, so I'm sorry, this is share forfeited CR balance minus share forfeited DR balance, right? And in case all the shares forfeited are not reissued, let's say 100 shares have been forfeited and out of that only 80 shares have been reissued, in that case we have to apply this formula: share forfeited CR balance into number of shares reissued divided by number of shares forfeited minus the share forfeited DR balance. Right, so this is the formula for calculating capital reserve. Please don't get confused with the DR and CR, it just got mixed up. Okay, let's understand this with the help of an example that will be more clear. So, a share of rupees 100 is the face value issued at a premium of 10. So, we have premium here 10 rupees, on which 80 including premium. So, in this 80 premium is included was called. So, what does that mean? 100 plus 10 is the amount of that's the face value and the premium, and out of this only 80 rupees has been called, which also includes the premium. That means 10 rupees for premium has been called and 70 rupees from the face value has been called. Total is how much? 80 has been called. And out of this 70, 60 including premium was paid. That means premium 10 rupees was paid, and out of this 70, that means 50 rupees was paid, because the total out of 80, 60 rupees was paid. And these shares have been forfeited. They were later reissued as fully paid up for 70. I'm going to explain this again. Look here. So, as was given in the question, the nominal or the face value is 100 and the premium is 10. Now, it's mentioned in the question that 80 was called up and 80 includes the amount of premium. So, that means out of the face value, how much have you called up? Out of 80, 10 rupees is the premium. So, how much will be left? 70. That means out of 100, 70 rupees has been called up and premium also has been called up, right? Now, out of this called up value, what is paid and what is unpaid? Right, now it is mentioned 60 including premium has been paid. 60 including premium has been paid. That means out of this 60, 10 rupees is the premium. So what other balance is left? 50. That means out of this 100, 70 was called up, and out of this 70, 50 was paid. So how much amount would be unpaid? Unpaid value will be 20. That means that out of the amount that has been called up, that is 70, 50 is paid and 20 remains unpaid. We need to calculate the unpaid value. Why? Because we need to calculate the calls in arrears. So in our entry for forfeiture, as you know that the amount that you receive How much have you received? You have received 50 rupees. The amount which you receive goes to share forfeited account, right? And the amount that you not receive goes to calls in errors account. Now premium in this case, please note here that premium was 10 rupee, it was called and it was paid. Now since the premium is paid, so what do? Yes, remember the mantra that whenever the premium is paid, you simply have to ignore it. So we are simply going to ignore the value of premium and pass our entry like we used to do earlier. So our entry for forfeiture would be, since it is the cancellation of shares, therefore share capital is debited, 2 share forfeited, 2 calls in arrears. Now the called up value was 80 including premium. That means we had calculated it was 70. Since we are talking about 1 share here, so called up value is 70. 2 share forfeited, the amount that we had received, I explained it to you, that is 50, and calls in arrears, the unpaid value, that is 50. Then we pass the entry for the reissue. Now the shares were reissued at rupees 70 as fully paid up. It was given in the question. So at 70, it means this at, whenever you see the word at or for or from, at or for, you should understand that this is the value of bank. So 70 goes in bank. As fully paid up means in share capital we will write the full face value. So 30 rupees is the amount of discount that is there, which will be debited to share forfeited account. Now we come to the capital reserve. Now in this question we are talking about 1 share. 1 share has been forfeited and 1 share has been reissued. So that means all the forfeited shares have been reissued. So our capital reserve will be equal to, share forfeited, CR balance minus share forfeited DR balance, that is 50 minus 30, which is equal to 20. So the amount of our the entry for this would be share forfeited account DR to capital reserve, that is 20. Now since in this question, as you can see, premium has not been mentioned anywhere. Why? Because again I'm repeating, since the premium was paid, that's why we simply ignored it while doing the question. Same kind of entries are passed as in case of forfeiture of shares originally issued at par. Now let's take another example. JCV Limited forfeited 200 shares of 10 each. So this is the number of shares. This is the face value issued at a premium of rupees 2. So premium is also there for the non-payment of what has not been paid, the allotment money of rupees 3, which includes premium. The first and final call of 4 per share has not been made yet. So that means 10 rupees is the face value, 2 rupees is the value of premium. Out of this 10 rupees, he's saying 3 rupees is unpaid, right? The allotment has not been paid. The allotment was 3 rupees, which includes the premium. So that means allotment is 1 plus 2 premium, right? And he's saying the first and final call of 4 per share has not been made. So out of this 10, 4 rupees has not been called. So what is the called up value? Out of 10, 4 has not been called. So that means the called up value would be 6. And out of the 6, 1 rupee on allotment, matlab total 3 rupees on allotment including premium has not been paid. So how much would be the paid amount? If we calculate the other stage, it may be the application obviously. So this one is on allotment. 6 minus 1 is how much? 5. That means 5 rupees has already been paid. Out of 10, 4 rupees has not been called. Bacha kya? 6. Out of 6, allotment is 3, which includes premium also. So basically allotment is 1. So what are we left with? We are left with 5 rupees, which is on application, which must have been received. 50%, I'll explain this once again. 50% of the forfeited shares were reissued. 50% means all the forfeited shares are not reissued. So 50% are reissued at 8 per share. I told you at means this is the value of bank. As fully paid up. Fully paid up means at the face value. So let's see how this question can be solved. First of all, have a look here. The nominal value was 10 rupees. 2 rupees was the paid premium. We don't know what's the value of application, but we know allotment was at the rate of 3. This is given. And this includes the value of premium. This was also given. Premium was 2 rupees. So that means allotment is for 1 rupee. The first and final call was 4 rupee, which has not been called yet. So if we look here, our called up value is how much? Out of 10, 4 rupees is subtracted. So our called up value till now is 6 rupees plus 2 rupees premium. right? So out of 6, since 6 is rupees is the total called up value, out of 6, 1 rupee is for allotment. So what will be the application? The application will be 5 rupees, as I explained before also. Now it is given in the question that allotment has been unpaid. Okay, it is given that allotment has been unpaid, first and final call has been uncalled, and obviously this means the paid amount is 5 rupees. So the amount that has been paid, that is 5 rupees, this goes to share forfeiture account because this is the amount we have received so far. The amount which we have not paid, that is the unpaid value, that is the allotment, this goes to calls in arrears, right? But here the premium is unpaid. Now whenever the premium is unpaid, that means in the entry for forfeiture, SPR, security premium reserve, should be debited. So you don't have to ignore premium. Wherever you see premium, you should always include. So our unpaid amount, what is the total unpaid amount? If the premium would have been paid, right, so we would have considered this 1 rupee as paid. But when the premium is unpaid, so the total amount is unpaid, that is total rupees 3 is unpaid and 5 is paid. Let us look at the journal entries. So in the journal entry, the SPR is debited. Our entry is share capital is debited with the amount of called up value. What is the called up value here? Our called up value was 6 rupees. I hope you remember 10 plus 2. Then out of this 10, 1 plus 2 premium was unpaid, that was on allotment. So accordingly we deduced, and 4 rupees was not called, so the called up value was 6 rupees, right? 5 rupees on application was received and allotment was not received. I've just made it here so that it is easier for you to understand this entry. So share capital, that means 200 shares into the called up value. The called up value is 6. I'm not including the premium here. So 200 into 6, that is 1200. Now security premium reserve is debited because the person has not paid the allotment and premium was on allotment. That means premium is also unpaid. So 200 into the value of premium, that is 2, that is 400. Share forfeited will be credited with the amount that has been received so far. So application has been received at the rate of 5 into 200 shares. So 1000 rupees goes to share forfeited. Calls in areas. 200 have not paid the allotment. I told you don't have to ignore the premium, right? Because the premium is unpaid, it is not to be ignored. We have debited it also and we will be including it in the calls in areas also. So calls in areas are total at the rate of rupees 3 because he has not paid 2 rupees premium, he has not paid the allotment. Total 3 rupees is unpaid, so that is 600. Please note, some children find out the share forfeited as the balancing figure, which is absolutely wrong. You should not do that, right? Now according to what I taught you, I have calculated each value myself. Then I can see whether both sides are equal or not. 1600, 1600, my question is correct. But if I go to if I follow this method where I calculate the balancing figure, I will never come to know whether my question is correct or not, right? Moving to the reissue. Now how many shares are forfeited? We have forfeited 200 shares. Now talking about reissue, it was like 50% shares are reissued, if I'm not wrong. So that means 100 shares are reissued, right? So the entry for reissue is bank account DR. How do I know share forfeited is to be debited? I'll just tell you, to share capital. Now 100 shares were of 10 each reissued as fully paid up at 8. At, I told you, goes to bank, right? So 100 into 8, 800 goes to bank. Fully paid up, that means 100 into the face value goes to share capital, that is 1000. So 200 is falling short on the debit side, that means that's the amount of discount that we have given. Now coming to the calculation of capital reserve. How is capital reserve to be calculated? Let us have a look at this. Just give me 1 second. Yeah. So how is capital reserve to be calculated? Share forfeited CR. Since all the number one, since when all the shares forfeited are not reissued, that means again I'll write it here. Number of shares forfeited was 200, reissued were 100. It's not same. When it's not same, you have to apply this formula, okay, which you see here. Share forfeited CR balance. What is the share forfeited CR balance? We calculated it as 1000. This balance is for how many shares? 200 shares. So 1000 by 200 into how many shares have been reissued? 100. So we have to calculate that out of 1000, which is the value for 200 shares, what will be the value for 100 shares? So 1000 divided by number of shares forfeited into number of shares reissued minus the share forfeited DR balance. The share forfeited DR balance means the amount of discount that has been given at the time of reissue, that is minus 200. So 500 minus 200 is 300. So 300 is the amount of the capital reserve, right? So I hope this is clear to you. One last thing I want to say again is whenever the premium is paid, simply ignore it as if it's not given in the question. Pass the journal entries as you would when the shares are forfeited, which were originally issued at par. But when the premium is unpaid, then you cannot ignore it. In the forfeiture entry, you have to debit it. And while calculating calls in errors, you have to include that as well, right? So that is it. I hope everything is clear to everybody. We have talked about the forfeiture of shares originally issued at premium, their reissue and examples also. If you have any questions, contact me on my email ID or you can leave a comment in the comment section below. I will try to revert as soon as possible. And if you're new, please like, share and subscribe to my channel. Show some love. And thank you. This is Inside Accountancy by Ch-1 signing off. Thanks.